Wonderful to see so many familiar and some new faces. Okay, since we're about 10:02, I'm going to go ahead and get started. We have a big, huge training ahead of us here. So welcome. And if anyone is new to Zoom, oh, good. Tashima, thank you for letting me know that you could hear me. If anyone is new to Zoom, feel free to shoot any messages over the chat. You should see your Zoom controls probably at the bottom of your screen, and there should be an option to pull up the chat box. You can chat any questions to us, and we'll try our best to answer those. As far as programmatic questions, for the time being, we're going to go ahead and hold those to the end of the training because we have a lot of ground to cover today. Also, you might have noticed that this training is being recorded. So we are planning to record this training as a resource for housing counselors and service providers to come back to after the fact, especially as you're onboarding new staff. This information can be really, really important for them as they're getting trained. If you are new to Homeownership SF, we are a nonprofit organization and a membership organization. And our collaborative is primarily made up of the HUD certified housing counseling agencies in San Francisco. Those are Asian Inc., Balance, Mission Economic Development Agency, or MEDA, San Francisco Housing Development Corporation, or SFHDC, and the SF LGBT Center. So we are joined today for this training by Melissa Cardoza from the Mayor's Office of Housing and Community Development, and Juan Vasquez Estrada from Tenderloin Neighborhood Development Corporation. This year, Homeownership SF has been funded by the Mayor's Office of Housing to provide coordination, capacity building, and some training support to all of the agencies funded by MOHCD that offer specifically housing counseling and application assistance. So we have developed this training with you all in mind, and we've invited some additional service providers to assist with housing search in San Francisco through other agencies. So ultimately, the goal of this training is to help provide you with the tools that you need to help your clients with their housing search. That includes figuring out what to apply for. That also includes figuring out how to support your clients as they hit barriers, whether that's a disqualification and they need help with an appeal, and so on. And just a reminder all to go ahead and please mute yourself as you come in. So many of you are fully trained, right, on kind of the basic housing application assistance model and how Dahlia works. The idea of this training is that we're going to go into a deeper dive around the rules for applications, documentation, and eligibility determination for tax credit units specifically, which make up such a huge part of our housing stock right now. So hopefully when you leave this training, the goal is that you'll have a better sense of how to support your clients in determining their eligibility in the first place, as well as how to help them along again as they hit barriers or road bumps, if they're disqualified, kind of what are the next steps to help them continue a successful housing search. And so without further ado, I think I'm going to go ahead and hand it over to Melissa Cardoza from the Mayor's Office of Housing and Community Development. And I'm going to not share my screen anymore. I think we have some other slides.
Good morning, everybody. Thank you all for joining this morning. I'm really excited how many people are on the call. Thank you so much. And hi, Olivia. I see your note. Good morning. So I'm going to be sharing just a couple of slides. My section is very small, but I'm just sort of going to give you guys an overview before Juan takes it away and goes into detail about the tax credit program. So Raquel, if you could put up my slides, that would be awesome. Okay, great. So my role at the Mayor's Office of Housing and Community Development is I'm the Marketing and Housing Preferences Project Manager. So I work on all of our new buildings and all of our wait lists. I review the marketing plans from the developers and the owners, the leasing agents that they submit. And I review them, I approve their documentation, and then I put all the information into Salesforce that generates the posting in Dahlia. And I oversee the marketing period when it's live on Dahlia, the lottery, and then some of the lease ups. And most of the lease ups for our 100% affordable buildings. So I'm just going to go through just to set a framework today of the two different types of programs that generally you'll see in Dahlia. We have the inclusionary program, often referred to as the BMRs, the below market rate units, and the 100% affordable program, often referred to as the multifamily program. So the way you can think about it is inclusionary means that it's affordable units in a market rate building. So it's a building that's coming up, there's market rate units in the building that would go on Craigslist or other websites that are, fair market value or market value. And then we have a set aside that are for below market rate units through our inclusionary ordinance through the planning department. And our office works on those units to monitor them. The other program we have is where the Mayor's Office of Housing and Community Development, along with other funding sources like the state or sometimes the federal government, HUD, will help fund 100% affordable building, which means every single unit in the building is affordable, and they normally have tax credits on those units. And so if they have tax credits, also you will hear the acronym TCAC, it's when the building is income qualified through the state program, through the TCAC program. So that's the two differences. If it's inclusionary, the income qualifications are through MoCD, and if it's tax credit, the income qualifications are through the tax credit program, through the state program. Could I have the next slide, please? So we're going to have a breakdown of the two different types of programs, and it's easiest to see them side by side. It's the most helpful. So for the two programs, the leasing agents, sales agents have a Dahlia training. There's multiple Dahlia trainings. Dahlia is the housing.sfgov.org. You guys are probably really familiar with it. It's publicly facing. So, people apply online. We have over 56,000 emails that we send out email alerts to every time there's a housing opportunity. So the leasing agents are trained on Dahlia and Dahlia Partners on how to use the system for both projects, inclusionary and 100% affordable. And they also are trained on the lease up. And we monitor the lease up. So the lease up takes place through Dahlia Partners, and that is a leasing agent portal that was just rolled out in the beginning of 2020. So we've been using it for about a year, and it's where after the lottery is run, it's where the applicant list lives and where the leasing agents log in to see the next person in line, get their contact information, to be able to contact them and let us know what's going on with that project. They can put in notes. So all of that training is the same for both inclusionary and 100% affordable. The inclusionary program has rules that are under our procedures manual. Every 5 years, we publish a procedures manual with all the rules for the program, including the income and asset calculations and the review and analysis worksheet, which is a calculation Excel tool that the leasing agents use to lease up. So everything is well documented in the procedures manual, and we are monitoring to make sure the leasing agents follow through and complete those documents completely and accurately. Our staff provide technical assistance using those documents. We provide auditing and oversight in the lease up for income qualifications. Pretty much everything goes through our office to make sure that the qualifications were done correctly, and the leasing agents work on those documents are approved before they contact an applicant. And income, credit, and criminal appeals all go through our office. So if there's a disqualification and an applicant appeals in the inclusionary program, one of the supervisors in our office, either Sonia Delgado Schomburg or Jackie So, reviews the appeal, reviews all the documentation, asks for more information, and makes a determination on those appeals. One very important thing to remember in the inclusionary program is there are no wait lists. We cannot issue a wait list because of the ordinance only allows for re-rentals to be reposted on Dahlia. So there are lots of re-rental lotteries. As you normally see, there's like 1 or 2 units available in a building, and that is a re-rental. It means the initial person who vacated the unit, and now we need to put it back out to marketing. So in the inclusionary program, there's lots of lotteries because there's no wait list. So that's definitely a very specific program, and it's 100% monitored by our office, and we are definitely the experts on that program. For the 100% affordable program, I'm normally working on those, and the income and credit appeals are done by the building site. I'm sorry, the income appeals are done by the building site, and sometimes, occasionally, I do review credit or criminal background appeals. There are few and far between on the multifamily side, a disqualification for credit or criminal. But definitely for income, if people are over or under income, the building site and a supervisor at the site reviews those appeals. So I get questions about them, and I normally refer you back to the leasing agent because I don't look at those appeals. And that is because I am not a TCAC expert, and no one in my office is. And the TCAC program is very specific. You have to be trained in it. And it has a set of rules through the state, which a whole set of procedures through the TCAC monitoring manual. And so the building site does a lot of training. The leasing agents are all trained how to use that program, and its documents. It's a TIC, which is the calculation document, Excel document that they use. So they are the experts on that, and they have a compliance team that also looks at the income to make sure that it fits within the criteria, the eligibility criteria for those units. For the multifamily 100% affordable buildings, we always create a wait list. The wait list is created after we're 100% leased up. Colette on my team and myself create the wait list, and it's very tedious, but we go line by line to make sure everybody who's supposed to be on it is on it. And so we do that for the building before we hand it off to our asset management team at MoCD, who oversees the building throughout the years, and they do an analysis on the building every year, annual monitoring report. And the state agency oversees the compliance of the units and all of the documents that go along with that compliance, such as the TIC, the tenant income certification, the verification of employment, and any other document is normally provided by the state for them to review. There's a lot of documentation on the TCAC side. Everything is documented. Everything has to be crystal clear for their monitors and their auditors to review once the building is 100% leased up. So those are the two different programs, and I hope that gives you a little bit of clarity as we move forward into talking about the 100% affordable TCAC units and how they're leased up. And I think that's it for me. I'm gonna pass it over to Juan, maybe, or maybe Raquel.
Okay. Thank you so much, Mel, for that information. Thank you so much for providing that distinction as to how MoCD's role is with regards to the review process, both the inclusionary and what we normally call as TCAC. So right now, as you mentioned, you're not the expert when it comes to TCAC, but we have somebody right now who's an expert who will be introducing, providing us information with regards to TCAC, the policies and compliance. So I will have one from TNDC to take the floor.
Thanks, Raquel. Let me share my screen now. I think you need to stop. Okay, thanks for that. Let me share my screen now so I can pull my presentation. Hold on. Can everybody see the presentation?
I don't think we can.
No, you can't?
Yeah.
Okay, just hold on one second. Let me see what is, okay, share screen. Now?
Yes.
Yes, so perfect. Let me move this here. So good morning, everyone. First of all, I want to thank the Homeownership SF team and Raquel and Kristen for this invitation for this training today. I really hope that I can cover and respond to all the questions that you may have regarding tax credit program and applicant processing. Let's start the training. So basically, a little bit about myself. I graduated from the University of Puerto Rico. I have a bachelor's degree in business administration with a major in accounting. I've been working for 19 years in the affordable housing industry. That's a lot. I was thinking about that when I was working with the presentation, that every year that I do a different presentation, I need to add 1 year, and that is making me a little nervous. But basically, I worked as a director of compliance, audit and compliance office for the Puerto Rico Housing and Finance Authority. Just for you to know, in California, CTCAC, the California Tax Credit Allocation Committee, is the state housing credit allocation. So in Puerto Rico, the state housing credit allocation is the Puerto Rico Housing Finance Authority. So I was the director of compliance of the state housing credit agency. Now I am working with property management. So now I'm always joking that I am at the other side, right? I am now. Before I was making inspection of properties. Now TCAC is inspecting the properties that I work with the compliance. I am currently responsible for monitoring the compliance requirements for all properties owned and managed by TNDC in San Francisco. And I want to make a brief, let's say, a clarification or maybe a disclaimer. The information contained on this presentation is mainly based on TNDC procedures. So there can be a small difference between how other property managers handle some of these requirements of some of the topics that I'm going to talk here. I will try to explain you, to let you know which are those slight difference during my presentation, but I wanted to say that up front, right? So this is all based on TNDC's policies and procedures. So I also wanted to add that portions of the presentation were taken directly from TCAC manual and also from manual HUD 4350.3. That's the one that the tax credit properties use to manage or to the regulation for the occupancy requirements. Okay. So the training objective for today, I'm going to try to make a brief introduction to the low income housing tax credit program. We call it the TCAC program. TCAC is the agency. TCAC is the state housing agency. The program is the low income housing tax credit program. And then after I make that introduction, I am going to talk a little bit about the list of process. This is post-lottery. This is after Melissa and her team, they enter all this information in Dahlia, they run the lottery, and then we start that list of process. I am going to talk about the appeal process. I'm also going to talk about income calculations, the regulations and methodology. I am going to talk about asset calculations, eligibility determination, some other requirements, and about the annual recertification process. So let's start with the brief introduction to the low-income housing tax credit program. First of all, what is a tax credit? So we hear tax credit. This unit is a tax credit unit, but what does that mean? A tax credit is only a dollar for dollar credit against tax liability. I'm going to explain you later how this works with our properties. The Low-Income Housing Tax Credit Program was established as part of the Tax Reform Act since 1986, so it's been a long time. It's commonly referred as Section 42 because this is the applicable section of the Internal Revenue Code that applies to the tax credit program. The tax credit program provides incentives to encourage individual and corporate investors to invest in the development, acquisition, and rehabilitation of affordable rental housing. What does that mean? Basically, definition of the tax credits is a dollar for dollar against tax liability, right? So let's say I want to build a new property, but the only problem is that I don't have any money. So if I want to build a new property, if I don't have any money, then I will apply for an allocation of tax credit with the California tax credit allocation. The California tax credit allocation can give me an allocation of credits. For example, let's say that I need $4 million to build a new property, and then they can give me, let's say they can give me $2 million in credit, right? So they give me $2 million in credit for a $4 million development. So the first thing is that they give me $2 million in credits, but I need to sell that because that's not money, right? So what I do is that I sell those credits to an investor, and let's say the investor gives me $1,500,000, right? So I use that money, that's $1,500,000 to build the property, but then the investor is going to claim $2 million in credits for a period of 10 years. That's the amount of money that they received for giving me the $1,500,000 at the beginning of the development. Receiving that money means that the property needs to comply for a period of 10 years. If there is any non-compliance, then the investor will not be able to claim that credit on their tax credit return. So that's the risk that they are getting as an investor. And that is why this tax credit unit needs really to be in compliance with program regulations. When I explain you about this new development, I told you that the development cost would be $4 million, right? And then I only received $1,500,000, so I still need $2,500,000. That $2,500,000, I have several ways of getting that money. A loan, another regulating agency, and that's why sometimes you have a property that have 5 different funding sources, and every funding source have a different MI, and that can complicate a little bit things, right? But talking about the tax credit program, we need to comply 10 years. Well, basically the compliance period is 15 years, but in 10 years, the investor is getting his money back, okay? It's an indirect federal subsidy, that the tax credit, that finance the low-income housing. So that is why it's LIHTC, Low-Income Housing Tax Credit Program, that is managed in California by the California Tax Credit Allocation Committee. Okay, this allows the investor to claim the tax credit on the federal income tax returns. The tax credit is calculated as a percentage of cost incurred in the development of affordable housing property. Some investors may obtain additional tax benefits by making LIHTC investments, so that's why they they put their money on this type of developments. The State Credit Agency in California is the California Tax Credit Allocation Committee, or TCAC. So basically, Low-Income Housing Tax Credit Program is a program of the IRS. Each state have one state allocating agency. In California is TCAC. What is the responsibility? The responsibility of California Tax Credit Allocation Committee? Monitoring plan. If you go and if you search on Google and you write LIHTC California and you go to the compliance, you will see that there is a California compliance manual. So that manual has all the information regarding California and the tax credit program. Also, the owners, we need to send an annual compliance certification stating that our property was in compliance through all the year. We need to send that to TCAC every year. The State Housing Agency, we have regular inspections. Usually the inspections for the tax credit program are every 3 years. So they made an inspection of the list of files, of the first year files. They made inspections, and then after that is every 3 years. There are some record keeping requirement, notification. That means that if the State Housing Agency notes any non-compliance, they need to notify the IRS that there was a non-compliance in one of our units, and then that will not allow the investor to request or to claim that credit for that year. So if there is one unit that is in non-compliance, TCAC notifies the IRS, and then the investor can't claim the credit for that year. They also do physical inspection of our units. So our units need to be suitable for occupancy. And then the file inspection usually is 20%. Now, because of COVID, they have expanded their sample. Now it's at 30%. Okay. I think this slide is important because sometimes people confused and hear about tax credits and think that that's a subsidy like HUD, like Section 8, or like any other subsidy. But as I explained before, tax credit is not a subsidy. Tax credit is a money that we are receiving from an investor at the beginning of the development to build the property. And then the investor is claiming those credits for a 10-year period. So tax credit is not a subsidy. It's not money that the owner receives on a monthly basis like Section 8 or like other subsidies. Again, the credits are available for 10 years. The compliance period is for 15 years. The program is monitored by an agency in each state. This is important because every state have their own rules. And then for California have some specific rules. I'm going to talk about them later that are different for any other state in the United States. The owner will usually bring an investment partner to the deal who has large stake in the compliance of the property. So it's funny, we as owner, for example, for one property, I can have, in a year, I can have 4 different inspections. Depending on how many funding sources the property had, we can have inspections from TCAC, inspection from HCD, inspection from the investors. So we have investors that require us every month to send reporting about AMIs, income, occupancy. For someone, we need to send every month reporting. What are, for the tax credit program, what are the eligibility requirements for the units? Income limits, you all know that that's the most important, and household income calculation. Also, the gross rent would need to be within the limits. unit should be suitable for occupancy, non-discrimination in availability of the unit, non-transient, initial leases for the tax credit program must be for a period of 6 months, that not less than 6 months. We in TNDC, we have a 1-year lease. Usually all companies have a 1-year lease, so that would be no problem. We need to report annually the status of those units. We need to recertify the units on the first anniversary, and the unit must comply with the student rule requirement. I'm going to talk about that later in my presentation. There are certain special rules for the tax credit program. We have the available unit rule that only applies to properties that have tax credit and non-tax credit unit. I'm not going to talk about that right now. The vacant unit rule, that vacant unit rule only states that that investor can keep claiming the credit if the unit is suitable for occupancy, even if the unit is vacant, but the unit must be vacant and must be suitable for occupancy and must be, and the owner must be making reasonable efforts to rent the unit. We have a waiting list. We post the vacancy in ads, reasonable efforts to fill the units. And the last one, the full-time student rule, again, we're going to talk about that later in the presentation. Okay, so basically that was my fast description of the tax credit program. Again, it's not a subsidy program. It's a money that the owner receives from an investor. In exchange, the investor is going to claim the credit for 10 years. If there is any non-compliance, TCAC will notify to the IRS, and then the investor will not be able to claim the credit. So that is why all our units needs to be in compliance with all TCAC requirements. Okay, so now let's talk a little bit about the lease-up process. This is what happens after MOCD runs the lottery for the unit, okay? Okay, so basically, we need to contact each applicant in lottery rank order. So that's a standard. Basically, that's a standard. For applicants that claim the live and work preference, that preference must be verified in the system. So basically, and this is, if you are helping someone that is applying for this unit, it's important to tell them that they need to upload the information based on, there is a list in Dahlia of what information they can provide to support that they live or work in San Francisco. We had a property that we are leasing up now, and then when we opened the first applicant, what the applicant uploaded was a flyer, and then we were like, okay, so we can't use this. We need to get back to the applicant, and we need to ask them for information that we need to support that they live or work in San Francisco. And then if they can provide the information in 24 hours, then we need to take them out of the list. So what I'll say to everyone is that if you are claiming this preference, please look at the list of acceptable documents that you can upload to support that you live or work in San Francisco, and upload one of those documents. Okay, so the first thing with live and work that we do is we check the preference. We can't continue until we don't check that preference. Then we would contact the applicant, and this is like a standard process. We use letters to mailing address, email the applicant. You use alternate contact. We call the applicant, and we text message even the applicant with a deadline of 5 calendar days. So what is important here is, please tell them to check when they enter the information in Dahlia that the information is correct, the mailing address is correct, the email, and all the information is correct, because when we need to contact them, that's the information that we are going to use to contact them. If we don't receive any response from that first approach, we send a second email to the applicant and the alternate contact. We call the applicant and we call the alternate contact. So again, there is an option for them to enter the alternate contact. So please tell them to write someone that if we can't contact them, that we at least can find someone else that can give them the message that we are trying to contact them. So we call the contact and text the applicant with a deadline of 5 more calendar days. If they don't respond, then we just continue with the other applicant on the list, okay? As soon as we contact the applicant, we schedule an interview with them. All the applicants must have an in-person interview. I wrote their Zoom because we at TNDC are using Zoom right now. During COVID, we are using Zoom. So for that initial interview is usually, we are also using other electronic systems like, oh my God, like for the signatures like DocuSign. And because TCAC is allowing us to use that, so we are also using DocuSign. But the thing is that for that initial interview, we want to really start the process. We want to complete this as soon as we can, right? So for that initial interview, all adults who live in the unit must attend the interview. Why? Because we need to confirm the information, the income, assets, and all the information for all adults. So we want them to go to that initial interview in a way that we can get all, the most important document is the release of information. Because with that document that we can start sending confirmations or verifications to employers, sending confirmations to banks. So that's important of all adults to go to that initial interview, and so they can sign up that information so we can really start the process, okay? Then the household income qualification will be determined based on the supporting documents submitted by the applicant and in accordance with the funders regulation. Again, in this case, we are talking about TCAC, okay? Once we receive all the information, all the income assets information, we review that information and we determine if the applicant is income qualified for the unit. It's important, you all should know, sometimes since there are different levels of AMIs, you can have, for example, one BR unit with 3 different levels of AMIs. So when I say levels of AMIs, is maximum income limit for the unit. So you can have a property with 10 1 BR units, and 5 of them, the income limit is 30,000, and for the other 5 is 40,000. So that can happen because of different funding requirements. So that also can happen. As soon as we finish the income qualification, because we need to comply with the San Francisco Police Code, the San Francisco Fair Chance Ordinance, after we determine that they qualify for the income limits, then what we do is that we run the screening report, okay? Once we determine that they qualify for income with the screening report, the units will be offered to applicants who meet all qualifications for housing. Unit offers are also made in lottery rank order. Applicants who have been accepted and notified in writing shall have at least 10 calendar days thereafter to enter into a lease agreement. If the applicant fails to affirmatively respond, the application will be denied. Applicants that are denied housing and granted their appeal will receive an offer to the next comparable unit. If ineligibility is determined, the applicant and MOCD are notified in writing. Okay, so 10 days to accept the unit or to enter into the lease agreement. If not, we'll deny the application. So those due dates are important to all, for all applicants to comply, because if not, they are at risk of being denied for the unit. What documents we require? TNDC requires valid photo ID, social security card, recent benefit letters, pay stub 3 months. This is a TCAC requirement. I'm going to talk about that later. Record of self-employment, audited financial statement, recent tax returns or forms, pension or insurance award documents, bank statements, 6 months if checking accounts, current if it is a savings account, child support verification, information on all other sources of income and assets, current tax return, that's only for self-employment, and documentation in support of explanation for requests of mitigating circumstances for a reasonable accommodation. Okay? Okay. So basically, that was the process from selecting the applicants, contacting the applicants, getting all the information from the applicants, determining qualification, running a screening report, and then offering the units to the applicants. Okay. Right now, I am going to talk about a little bit about the appeal process that we follow at TNDC. So an applicant may be denied at any time if they have not met one or more of the resident eligibility and selection criteria. If an applicant is denied, they will be notified in writing, which will state the reason for the denial and the right to appeal. The applicant has 5 business days after the day of the denial letter to submit a written appeal. This is important. Please consider that time frame. Every company have their ways of sending these appeals. At least at TNDC, we have, and we write on the denial letter, is our email address of the compliance team at tndc.org. We also include a phone number. We include a fax number. So that there are like at least 3 ways to send in this appeal. So it's 5 days. If this is important, it is 5 days. And this is something that we can't, if we don't receive it, we can't even see it, because we can't do that for one person and then for another do something differently. That's something that we can't do based on fair housing requirements. For disqualification based on criminal screening, it's different. For criminal screening, the applicant has 14 days to appeal. And we must hold a unit, a comparable unit, to the applicant in case that denial is overturned. If a denial letter is sent to an applicant and no response or new evidence is received within 5 business days, then we'll be closing the file permanently. Okay. Okay, this is important. An appeal must consist of documentation refuting the stated reason. Please, let me give you some examples. If you have an appeal for over income, right? Then you receive an appeal that says to TNDC, I just want to clarify that I am not over income. Okay, but you are not over income, but why? There was an error on your documents. There was that you redo the calculations and there is an error, maybe, you know, even that before sending a denial, the file has been reviewed by several persons at TNDC. I'll say there's space for some differences. So let's say that there was an error, or maybe we consider an amount that is not correct. So you should state the reason for the appeal. Okay, you should not just say, well, I am appealing because I think that I am income qualified. That is not going to work. Okay, we need documents. We need to document every decision that we made. We need to have the supporting documents inside the tenant's file. Okay, so please consider any mitigating circumstances that the applicant feels would affect the application and that would overcome or outweigh the information already gathered in the resident screening process, or the mitigating circumstances must be documented in the appeal and must corroborate the reasons given by the applicant for the disqualifying circumstances. So this is definitely important. We need to have all the reason. We need to, that appeal must have supporting documents. If there is any error in any of the documents, an updated document. If there is anything new that the applicant wants to add, we also need that information to be with the appeal so we can have a complete appeal, and we don't start a process of receiving an appeal, denying the appeal, or receiving again the appeal. So also my recommendation is that if you are helping someone that is appealing, if you also wants to even contact us and let us know, hey, this applicant was denied for over income. I want some help. Maybe how you did the calculation. We're going to talk about the calculations later in my presentation, but if you feel that there is something, there is any error in the calculation, just you can also contact us, okay? Then we'll notify the applicant of the final decision no more than 10 business days of receipt of the applicant's written notice of appeal. Further information or research sometimes may be necessary, so we are not, not saying that all will be resolved within 10 business days, but for some appeals can take up to 30 calendar days, okay? Okay, so basically that was the information for the regarding appeals. Right now, I am going to talk about the eligibility determination, income calculations, and regulations, okay, for the tax credit program. Okay. We talked at the beginning of the presentation when I was talking about the basics of the tax credit program. We talked and we saw that the low income household tax credit program is a program from the IRS. We all know that the IRS is not a housing agency, right? The IRS is definitely not a housing agency. So basically the IRS created the low income housing tax credit program, so they provide the credits that the investors buy. But then what they say is that since I don't have any regulation regarding housing, for the tax credit purposes, the regulation that the tax credit program is going to use is HUD regulation. So tax credit use HUD Handbook 4350.3, Chapter 5. Again, if you go to Google, if you search for that manual, you are going to find that manual. That manual says everything. What income should be counted, what income is excluded, how to make the income calculations, how to make the asset calculations. But hold on just a second. It contains all the information, yes. That's what the IRS says, yes. However, like I also said before, every state has a different agency, and every agency have a different set of rules. So there are certain specific requirements that California, and California is clear on their manual. California says, the IRS says that we should use HUD manual 4360.3. That's on California's manual. But then they say also, however, we have certain specific rules that are not aligned with the 4350.3. So I am going to discuss some of those rules later also on my presentation. But again, is manual 4350.3, chapter 5, the one that we should be using to determine income, to determine assets. If you go to that chapter 5, you'll see samples of everything. How to make calculations of employment, self-employment. If the tenant has a property, a real estate property, you have all the information regarding income and asset calculation on that chapter 5, okay? So again, please keep in mind that the allocating agency, in this case, TCAC, can impose stricter requirements for determining income eligibility beyond what HUD Handbook 4350.3 requires, okay? Please also remember that. Now we have elements of annual income. This is important. Annual income is the gross income the household anticipates it will receive during the 12 months following the certification effective dates. I've received, at TNDC, I've received appeals where the applicant is determined that is over income, and then the applicant tells me on the appeal, hey, I am not over income. Why I am not over income? I am not over income because I am attaching here my last year tax return, and I didn't earn last year, or the amount that I earned last year was below the income limit. So that's not an appeal that we can accept. Why? Because that was your earnings of last year, and the tax credit program do not use last year earnings. The tax credit program consider the gross income that the applicant will receive during the next 12 months. So if you have an appeal for over income, don't send the tax return last year. Again, we need to, with current situation, with current tenant's income, we need to make a projection of the next 12 months, okay? So management also will exercise due diligence by asking follow-up questions when the income certification process reveals unusual circumstances suggesting additional sources of income, okay? Okay, there are some situations that it's difficult to estimate income if they work sporadically or seasonally. Household report little or zero income. In these cases, the income may be determined based on actual income received in the last year or use reasonable judgment. This is what the manual says, reasonable judgment, but we need a lot of documentation to support sometimes that reasonable judgment. It's not that easy, right? Okay, elements of annual income, whose income is counted. This chart, I think, is a good one, right? So for the head, spouse, or co-head, right? And other adults, so basically this is why we need to verify other adults. You count everything, right? You count everything. So for dependents, if you have a child under 18, you don't count the employment income. You only count $480. That's for child under 18, okay? For example, this is if the child is working, you can earn, I don't know, a large amount of money. However, you only count $480. Also, but if this person is, if this child under 13 is receiving, for example, Social Security, that amount you need to count it. You don't count employment income, only 480, but Social Security, yes, you count all the amount, okay? So for full-time student over 18, you also, here, you count 480. Foster child under 18, no, and non-member, eliminate. Non-member, you never count the income of a non-member, okay? Okay. Oh my God, I closed it. Hold on. Here, okay, I'm here. So continuing the presentation, the annual income includes, again, gross amount, wages, salaries, overtime pay, commission fees, tip, bonuses, and other compensation for personal service of all adults in the household, including persons under 18 who are the head, spouse, or co-head. Includes salaries of adults received from a family-owned business. Also, gross amount of periodical Social Security payment includes payment received by adults on behalf of individuals under the age of 18. That's what I saying in the last table. Annual income includes alimony. Annual income includes also recurring monetary contribution or gifts regularly received from person not living in the unit. So that is counted. If they pay directly to a childcare, it can be excluded, and you also exclude any gift of groceries. So if it is in groceries, you don't count it. But if, for example, if someone is paying for your water bill, that should be included as income, okay? Also the income from assets. So assets are items of value other than necessary personal items. Income from assets is taken into consideration when determining the eligibility of a household, okay? It's not the value of the asset itself. So you can have, let's say, $100,000 in a saving account. You don't count that 100,000. You only count the income from that asset. So you have $100,000 on a savings account that generates some interest, some annual interest. So that interest, the income that you're obtaining from that account, that is the amount that we add to the applicant's income, okay? So assets, the assets include savings or checking. Savings account, we use current balance. For checking accounts, we use the average balance for the last 6 months. For equity in real estate or other capital investments, we include the fair market value less any unpaid balance on any loans or the reasonable cost that will be incurred in selling the assets. If you have for example, a property, real estate, you need to determine this cost that will be incurred in selling the asset, and then you have what is your equity on the property, and then that is the amount that is considered as an asset, okay? So asset information must be obtained at the time of application. So we request that at the time of application, but there is something here. If the assets, if the combined value of the assets exceeds $5,000, we request third-party verification of assets. However, if the amount of assets is under 5,000, we at TNDC don't require that third-party verification of assets. There are some other property managers that even if it's under $5,000, they require at least 2 bank statements. I'll say that's a good practice. Bank statement can show you a lot of information regarding if the tenant is receiving any additional income, so that's good. However, there are some companies that definitely, if it is under, I don't verify the assets, and that's part of the regulation, okay? Okay, So let's go to the income calculation methodology. Okay, so let's start. First, how are you going to make these calculations once you have the wages? So basically, hourly wages, as you all know, is 2,080 hours a year. If the person receives weekly payments, you need to multiply it by 52. If it is bi-weekly, then you need to multiply it by 26. If it is semi-monthly, by 24, or monthly amounts by 12. To annualize income from other than full-time employment, you need to multiply those periodic amounts by the number of periods the household member expects to work. Okay? Okay. Again, you need to use current circumstances to project income, okay? Unless verification forms indicate that an imminent change will occur. And that means one example is if the BOE, if you have received a BOE that have hourly salary is $20 per hour, but then the BOE also has a space that says, please right here if the applicant will receive an increase of income. And if it says yes, in 6 months it's going to receive an increase to $25, then we need to also consider that. So we need to consider the $20, and then we need to consider the $5. Now that I am talking about the BOE and the amount of income and the hourly rate, I want to make one clarification that this is also something that happens a lot, and is that sometimes there is one field on the form that states or that asks the employer, please write here the average number of hours that this applicant works a week, right? So then the employer writes 10 to 20 hours, okay? So the regulation requires us to use the highest of that range. So we need to make the calculation based on 20 hours, okay? So that happens a lot. So it happens that we receive an appeal, hey, I don't work 20 hours, but we need to use 20 because that was the amount used on the verification of employment. In those cases, if the tenant can talk to the employer, if the employer can provide any evidence that that's not the amount that he is consistently working, then we can accept an appeal. But again, it's important for employers, and I don't know how the applicants will explain this, maybe, I don't know, to employers, but if they are writing an average, if it is from 10 to 20, that's 30 hours, divided by 2, that's 15 hours. They just need to write 15, and then we consider the 15 hours. But if not, if it says, the BOE says 10 to 20 hours, we are required to use 20 hours to make the income calculation, okay? So that's the next point that I have there, number 4, that is that when an employer gives a range of hours as the number of hours worked, a conservative approach must be taken, and then the highest number of the range be used for income calculation. So that's the regulation. It is not recommended to use an average. We at TNDC don't use an average. We use the highest, okay? Okay, so next one is the year-to-date income is annualized by dividing the year-to-date amount by the number of weeks included in the figure multiplied by 52 weeks. We are going to see a detail of this later, okay? HUD's enterprise income verification, we can't. So the tax credit properties can't use the EIB data. That data is only for HUD properties. Tax credit properties, we can't use that information, okay? Okay, so let's talk specifically now about how California makes the income calculation. So I'm going to take some time with this so you can help applicants to understand, because sometimes they don't understand, but the problem is that this is specifically on TCAC manual. So this is the way that we are required to do our income calculations, okay? And I'm going to, right now I'm going to explain it the way that TCAC wants us to determine the applicant's income. So TCAC calculates the income in 3 ways. It's 3 ways, but it's 4 calculations. It's 3 ways, but it's 4 calculations, okay? And TCAC requires us to use the highest number. So we need to use the higher, again, like on the average hours working, if there is a range, we need to use the highest. It's the same when determining income. It's the same. We need to do the 4 calculations, and we need to use the highest amount of each of all the calculations that we did, okay? Okay, if there is any conflicting information between the BOE and the pay stubs prior to moving in the household, then there must be third-party written documentation from the employer clarifying the discrepancy. This is why I'm talking about if there is any appeal, we definitely need to have that information in our files. Additionally, more pay stubs may be requested to determine eligibility and demonstrate due diligence, okay? Let's start with the calculations, and let me get back, hold on a second. Okay, so the first calculation, and again, TCAC requires, okay, let me start with the BOE calculation, and then let's get later to the pay stub calculation. So the calculation that we call calculation number 1 is the BOE calculation. That is like the standard calculation, right? Average hours multiplied by my God, rate per hour multiplied by hours worked, okay? So that's the annual income. You can say that's the annual income, but please also check on the BOE form if there is any overtime or if there is going to be any change in the tenant hourly rate during that period of 1 year that we need to consider, okay? So first calculation, you take the BOE, you take the hours. Remember, if on the average hours worked per week is a range, we use the highest one, okay? If there is only 1 hours worked during the week, 30, well, that's the amount of hours that we use, okay? Always multiply that amount by the numbers of hours worked per week, and then you will have the annual income. Remember also to add the overtime if there is any shift differential or bonus if they are listed on the BOE. Also, consider any anticipated increase in hourly rates for the next 12 months. Remember, we want to have that amount that the tenant will earn during the next 12 months. That's a projection, that's an estimate of what happens at the end of the 12-month period. We need to sit down today, see all the current circumstances, and then project for the next 12 months, okay? So the second calculation that we need to do this with all our files. The second calculation that we need to do is the verification year to date. So all our BOEs also have 1 blank space where the employer can write the year to date of that applicant, okay? So we need to take that year to date, we need to consider the number of pay days so far, and then we obtain an amount. If they receive payment every week, we have a weekly amount, and then we can multiply that for 52 weeks, and then we have the annual amount. Okay. Okay. Remember also that if there is any anticipated increase for the next 12 months, we need that percentage in increase. We also need to add it to the verification year-to-date calculation. Okay. Okay. So the third calculation is the pay stub average. For the pay stub average, TCAC requires 3 months of pay stubs. So there is this is a California specific rule. If you go to any other state, this is not. This is a California rule, and sometimes depending on the property management company, sometimes it can even lead to disqualification or a denial of an applicant because, for example, if they don't have the 3 months of payments, some property management companies can say, well, you don't qualify for the program because you don't have the 3 months. So I think that's not fair, but that's the rule, okay? So you need to have 3 months of pay stubs, okay? So for the pay stub average, you take your 3 months of pay stubs, you add all the gross pay on the pay stub, you divide that by the number of pay periods, and then you obtain the average pay per pay period, okay? Also, if there is any anticipated raise, you need to add that. So remember also that you need to add that amount to the amount that you determine when you obtain that pay stub average, okay? Okay, and then the fourth calculation is the year-to-date. You also need to take the year-to-date on the pay stub, and divide it by the number of pay days so far by the number of pay days by year, and then you obtain a year-to-date amount. Remember also to add any percentage increase for any raise to obtain the annual income. So 4 calculations is the VOE, that's the standard calculation, hours multiplied by pay rate, adding any overtime, shift differential, or bonus. Then you have 1 annual income. Then you take the year-to-date on the VOE. You determine the amount of pay dates so far, and then you multiply it by the amount of weeks per year. Then you have an annual amount. Also, if there is any increase, you need to add it. Then you have the pay stub average. You just take your pay stub, all the gross amount, you add them, you make an average, and that average you multiply it by the pay periods that that person will be receiving for the next 12 months. And then you have the annual amount. And then also remember to add any anticipate raise in pay, okay? And also the fourth calculation, you need to take the year-to-date that is on the last pay stub, and then you need to make an annual calculation. And then once you have all those 4 amounts, then you will select the highest of those 4 calculations. So that's the way that we need to do that calculation to determine the income based on the tax credit rules. There is I was talking before about the 3 months requirement for TCAC. They came out with a rule. I think it was 2019. So basically, this is the rule. So for tenants that have less than 3 months worth of pay stubs to recently starting a job, TCAC will allow the pay stub that have been issued prior to moving to be used instead of the full 3 months. So that's good, as long as the following criteria has been met. So if someone has been working for only 2 months before they're moving, TCAC now will allow only 2 months of pay stubs, but these are the criteria that they require. So the total income calculation for the household based on both BOE and pay stub is less than 75% of the current maximum limits for household size. And there is at least one full pay period accounted for in the pay stub that were submitted. A single partial pay stub would not be accepted. So basically, now, after 2019, TCAC is allowing using less than 3 months, but this is the criteria that needs to be met in order to accept less than 3 months of pay stubs. So basically, these are all the income calculations. We also have, for example, tenants or applicants with IHSS. We use currently hourly wages by number of hours. There are also cash wages. TCAC says that the IRS has determined that those individuals are considered independent contractors. So we need them to file their tax return to support that information. And then CTCAC will require a copy of the file return and also a statement from the employer on company letterhead indicating the name of the tenant and how much the employer pays the tenant in cash each week, okay? Additionally, if a household is claiming that they do not file taxes, there is one form that we asked the applicant to sign. We send that form to the IRS, and then the IRS confirms if they file the taxes or not. And that's the form 4560. So if the applicant says, no, I am not filing taxes, then we ask them to sign that form. We send that form to the IRS, and then with that information, then we can just use the information from the employer, okay? Okay, for self-employment, basically what we do is that we use the last year tax return, okay? For self-employment, only for self-employment, we use the net income from business. That net income from business, you can find it on the line 31 of the Schedule C of the tax return, okay? So basically, remember, for self-employment is income, net income for the past year. At least at TNDC, for self-employments, we require to our applicants to provide first a self-employment affidavit where they say what they expect to earn during the next 12 months. We also require them a profit and loss statement, and also the tax return in order for, if they claim that they don't file tax return, we also send it 4560, and then we confirm if they really file the tax return or not, okay? But remember, for self-employment, net income from business, okay? It's the only one that we use net income, because for employment, we use gross income, okay? Okay, so Social Security and public assistance, this is also important. For Social Security, we include the cents. Some people ask me, but that's not the amount. Social Security is taking this amount for Medicare or other deductions, but we need to consider the gross amount, okay? Just multiply it by 12, and then you have the amount, same as public assistance, okay? For child support, also the amount that is confirmed that we need to use, we just need to multiply by 12 months. For regular temporary periodic payments, just multiply it by the times the person received it. For temporary periodic payments, like, and this is sometimes, this is a question that a lot of people have. For example, if someone is receiving unemployment, but let's say that it should end in 1-2 months, we are required to use the full for 52 weeks. Okay, even if it says that it should end anytime soon. Okay, we need to multiply it by 52 weeks. Okay, so monetary support, the amount of support multiplied by 12 months. Financial aid, we need to count the financial aid unless the student is over the age of 23 with dependent children living in the household of any age living with his or parent. This is basically HOTS rule also for a student, okay? To calculate, add up the financial assistance listed on the verification and subtract out the cost of tuition for a year, okay? So it's the assistance less the tuition, and this is for section 8 only, okay? Zero income tenants, they just need to fill the zero income certification. Yeah, and that's it. Usually, if the household has people that are employed, we require all the information for employment, and then we require for all the other adults that are zero income, we require one form from each of the adults, because we need to have supporting documents of income for each of the adults of the household composition. Okay. Okay, so let's go to asset calculations. And then for asset calculations, this is our, I'll say, the most common asset that we've seen. One of them is a checking account. We need 6-month average balance for that account. The other one is the savings account, but for savings account, we use the current amount. So we usually ask for the most current statement, and that's the one that we are going to use to determine. Remember, they can have $100,000 in an asset account, but that's not the amount that we add to the income. The amount that we add to the income is the income that account is generating the amount of income based on the percentage that income that account is receiving annually. Okay. For prepaid and debit cards, we use the current balance. CDs and money market accounts, we use the cash surrender value. That's the value less the early withdrawal penalty. And then the trust income usually is disbursed on a monthly basis. So we just take that account and multiply it by 12. There are some other assets. If you want to see these other assets and how to make a specific calculation of these assets, you can see and go and see the HUD manual 4360.3, and you can see there all the calculations for those assets, okay? Let's talk about eligibility determination and other requirements. Minimum income. Household annual income, but being no less than 2 times the rent of the apartment. The household is interested in renting, okay? So if the rent is $1,000, this is the easiest example. If the rent is $1,000, then you multiply by 2, that's $2,000 multiplied by 12. So the minimum income is $24,000, okay, for that unit. That applies for units that are not subsidized, because if you have a HUD Section 8 voucher, if the person has a HUD Section 8 voucher, you can there is no minimum, okay? Because the rent is paid by the subsidy provider, SFHA or any other subsidy, okay? So the minimum income applies to units that are not subsidized, and then the household annual income must be no less than 2 times the rent of the apartment, okay? A household can appeal for a decision of denial for being under income. When the household is denied for being under income, the household will need to demonstrate if they can receive it, if they are going to receive it, they will be receiving any additional income support from someone outside the household composition, okay? Also, in these cases, if you are helping an applicant and the person ended to be under income, the household can also seek for any subsidy that can be available for the unit. There are some places that provide subsidy. They just need to show that they were denied for being under income. So if the household is denied for being under income, my recommendation is that you can help him to get any subsidy, or if it is a small amount and the household has any family member outside the unit that can help them, that also, we also consider that as income. That's a support from someone outside the unit, and that also is documented, and we can also put that in the file. But also remember, the household really needs to have the money to pay the unit, right? Because we don't want someone in the unit that can end not paying the unit. That's not what we want, right? So the applicant can also review or update any income supporting document in case there is an error on the information provided initially. But that's something that they can do. So in general, for minimum income, if the applicant don't comply with the minimum income requirement, they can try to get a subsidy. They can, if there is any family member, any family outside the unit that can provide them a monthly support, they can also provide that, or they can also review update to see if there is any error on the information, even sometimes provided by the employers. Sometimes the employer can also make an error on the BOE or on any information that they provided. Okay. Other requirements for maximum income: the household annual income must be less than the applicable maximum income. We all know that, right? For the unit they are interested. Maximum income are established by each funding source applicable to the unit. A household can also appeal for a decision of denial for being over income. When a household is denied for being over income, the household will need to demonstrate if there is any change in income after they provided the documents. So someone is now not working, someone now not working, there was an error on the BOE provided by the employer, and then an update of these documents will be necessary in order to document the applicant eligibility with the program. The applicant can also review, update any income supporting document in case there's an error on the information that they provided initially. So basically, what I was saying, first, check the information that the applicant provided. Now you have the information on how to, the methodology for the income calculation, and then check the information that is accurate and provide any information on any updated information that can change that decision. There is something very important that I need you to tell you all, so you can tell all applicants that you are helping. And it's that the income calculation and determination is done at a certain point in time, right? So every moved in, when these applicants, when they moved in, there is an effective date of the moving date, right? So what TCAC do is that TCAC needs to determine or needs to validate that that applicant was income qualified at that time, at the time of the effective date of the certification, right? So if someone in the household, and this is important, let's say that the move-in for this household is March 1st, right? But let's say that it's March 1st, the move-in, but we finished all the qualification in February 28th, right? So, no, February 28th, no, on February 1st. Let's say February 1st. Let's say that the move-in is March 1st, and then we determine the eligibility in February 1st, okay? March 1st move-in, February 1st eligible, okay? But let's say that someone in the unit had a job interview for February 15 and was hired that same date. So applicant needs to let the property manager know that they started that job. If they don't, let us know that they started a job before we did the income calculation. Then we can have a problem, because when we perform the first year certification, we can see that that person started 2 weeks before the moving and didn't disclose that they have a new income. And then we can even start an eviction process on that family. So the best thing that I can say is, if you want to start, if you need to start a new job, that's fine. Try to do that after the move-in, because if you start before the move-in, that TCAC can say that we were supposed to add that income to the move-in, and that the tenant was not qualified, and that the unit is in non-compliance with the program. So please, if they start a new job, they can start after the move-in, they can start a new job. However, TCAC even on their manual says, if someone starts, they can start after they move in, they can start. But TCAC says, if someone starts after the move-in, let's say 1 month after the move-in, we can even ask that tenant, or we can even ask the property manager to ask the tenant to provide the offer letter for that job. Because if the tenant started, let's say, I said that moving was March 1st, right? But then the tenant started March 15, okay? TCAC can ask us, hey, get the offer letter and send me the offer letter for that tenant. And if the offer letter, if the job was offered before March 1st, that unit will be in non-compliance. So if they want to start, they should not receive the offer letter before the move-in. They need to start after the move-in. They can. That's something that they can do. That's life. So the owner did the work, the due diligence. We got all the information, the current information. We projected to 12 months. So we did our work, okay? The tenant started working 2 months after the moving, that's fine. What we don't need is an offer letter before the moving, okay? Okay, so let's continue. Other eligibility determination is the credit screening. And this is depending on the property manager. Again, remember at the beginning that I told you all that some things were different from company to company. So this is one of them. Some companies consider the credit, the minimum credit score for the tenant. TNDC does not consider the minimum credit score. At TNDC, I can say that we just run the credit to obtain if the tenant own any real estate, and also to check the appropriate counties that the tenant has lived, to check for potential criminal background screening. But we don't see the minimum credit score at TNDC. Some other property managers, they see that, and they consider that to determine eligibility. We don't check that. Okay. Residential history, again, this is specific for TNDC. No negative landlord references for current and prior 2-year housing in history. Examples are destructions of property, non-compliance with lease requirements, non-payment of rent, and no unlawful detainer eviction in the past 3 years or 2 in the past 5 years. This is, again, TNDC policy. Some other companies can have slightly different policies, okay? As for the criminal screening, we comply TNDC with San Francisco Ordinance, Fair Chance Ordinance. That means that we need to run the credit, run the criminal, and the credit, we run both at the same time after they are qualified with income and all the other requirements, okay? They should not have any of these off-limits categories, that is arrest that did not result in a conviction, participation in a diversion of deferred judgment program, expunged, judicially dismissed, invalidated, or otherwise inoperative convictions, juvenile record, a conviction more than 7 years old, or an infraction. So those are, we can consider these any off-limits categories, okay? Again, it's 14 days for the appeal. They have 14 days. And this here is at least when you are appealing, are some recommendations that you can add to your appeal when you're appealing any screening reports, okay? Full-time student, and I think that I am almost in the end. For full-time students, no household where all household members are full-time students. So if you have 2 persons in the household, both of them can be full-time students. That is a non-qualified unit for TCAC purposes, okay? The only thing is that if you have a household with 2 full-time students, you will need to have one of these exemptions. Is receiving assistance under Title IV, enrolled in a job training program, married and feeling jointly. So these are the exemptions. You have the exemptions here. So if the household is comprised of all full-time student members, it's not qualified by the tax credit program, and you need to comply with any of these exemptions that are here, okay? Okay. For annual recertifications, all households need to be recertified at anniversary date of moving. You all know that the process starts 120 days before the anniversary date, so we notify them since a lot of time. This process also includes the verification of income and assets, like the moving certification process. And when I say special attention to the first year certification, it's because in the first year certification, when we review all the documents, is where we can see if there is one of the members that started a job right before the moving, okay? So that's why that certification is so important, okay? Okay, so I included some annex. This is the tenant income certification for tax credit. You can use this as a worksheet when you have an applicant. This is all the information that we request them. This is also on TCAC website. This is the tenant income certification form, and then the certification of zero income. So I want to thank you all. I hope that that you enjoy the training. And again, thanks for the home ownership asset team for letting me be here in today. Now, Raquel is going to give you a few words.
Thank you so much, Juan. That's a lot of information and vital information. We're going to give Juan a chance later on to answer the great questions that have come through. So now I'll just do a quick share of what you can do as a counselor to be able to set up your clients for success. So let me share my screen. So basically, we want to make sure what we're trying to do here is make sure that we're establishing basically stabilization, housing stabilization for the client, and not just basically, us having to assist with the applications. So we're gonna start off here. Um, there we go. So I'll be giving you some counseling tips and resources that you may incorporate to help your clients navigate and troubleshoot applications, and also help frame their housing search to make housing more achievable and sustainable for them. So for reference, I'll be sending the copy of the slides with all the links and resources by email after this training. So I'll just be going over some of them, so you'll just be seeing them through the screen. So right now, the first tip that I have is actually make sure to follow a checklist. I'll be showing you that in a bit here. Bear with me. So this checklist is actually on our rental Trello board, rental resources Trello board. So some of you already have access to this one. Later on, I'll be posting a link, an invitation link. So for those who don't have access to it, will have access. So the rental checklist basically does help you be able to guide you through the process and streamline your sessions so you're able to cover the most needed information. So for example, if I click here, get to see it
Hey,
creates
Raquel.
yeah.
So sorry, we can't actually see that. Can you try to share one more time?
Sure. Sorry about that. Thank you so much for that. Bear with me here. Bear with me here, okay? Oh, let me do that. Sorry, my fault there. Do you see the screen though? Screen 2?
No, still not seeing anything.
Still not seeing it. I am so sorry there. Technical difficulties there.
No
So let's do that. How does that work? Is that working?
Oh, yes. Now it's coming through.
Perfect.
There we go. Yeah. Application
about that.
assistance checklist. Got it.
Perfect. So the application assistance checklist basically shows you the flow. So it guides you. So if you've never done one before, this will be one way to be able to assist your clients more effectively and get that information that Juan was saying, like more accurate information coming from the clients. Now, another tip that we can have is basically here is that you can also discuss affordability versus actual cost with your client. So this is where you want to make sure, like when you're discussing affordability, you want to clarify that pricing for affordable units is actually based on the gross income, and it's based on the range for a targeted population. Whereas the client's ability should be analyzed based upon what they could actually afford based on their actual net income and their budget. Also, when going through their budget, you want to make sure that you include their essential housing expenses, and living expenses. So you want to include debt payments. Then you want to make sure you make reference to expenses that will happen in the future should they actually get the unit. So this should be done in reference to the new rent amount. And any changes to their expenses once they secure the new housing. You want to ask questions like, will there be new or additional transportation costs? Are there projected utility payments given the new housing? Similar questions like that. And this is one thing that I want to emphasize also, just as Juan said, you want to stress the importance of accuracy, completeness, and transparency when providing financial and personal information to the leasing agents. Reason being is that the leasing agents actually, as he said, they base everything on the documents that they submit. So clients might sometimes like try to put information that might seem more acceptable or better fitting for the unit. And so that would not work because, of course, if it's not in the documents, then of course they may just be denied simply because the information was incorrect. Some employers might even do this for clients, thinking that showing a different income might improve the chances. So as much as possible, you want to emphasize that you want to stick as close to what's accurate as possible. Now, Now, in terms of those who do not have income, like after you've done the calculation, it doesn't seem like clients are not fitting those income levels. One way you could support your clients is to be able to maybe introduce the option of introducing them to other supportive services, or maybe send them through workforce development. In that way, they can become income qualifiable. So that's one way that we can support these clients. And then bear with me here. I'm having technical difficulties. Do you see this change? So is it okay? So the next tip that we have is to make sure. I am having technical difficulties today. So to assist.
Raquel, so we can see the slide that says reminder. Oops. Now it
There
says
we go.
refer clients to available financial services.
Perfect. Sorry. So I'm having technical difficulties myself here. So the next piece is that when assisting clients, you want to make sure that you also utilize some of the services that are available, especially for clients who need further budgeting help or need help addressing their credit issues. The resources that you see right now are just some of the resources that we actually shared during our last rental collaborative meeting on February 18th. But it's not limited to these, because I do know that there are some other agencies that are actually in this channel right now that are also providing similar services. So this link will be provided in the slides that I'll be providing later on by email. The next thing I do want to point out, though, that I want to do share is make sure that your clients track their applications. One way to do this. Can you see that? So one way to do this is, of course, by having a housing search log. The housing search log will allow you to type in write in all the information that you need, the date of the application, property name, and everything. What it does, it helps the client just keep track of everything, know whom to contact if their contact information changes, know when they've submitted something, when something is due. But one other most effective way is make sure that all your clients have a Dahlia account. Have them open one, have them basically use that on a regular basis. In that way, they can keep track of their applications. They won't have duplicates. And if ever their contact information changes, they could readily change that on their application. Okay. So we're going to go next. So now we're going to go next to this other resources. So another tip that we want to be able to provide is to make use of resources that are available. These are just some of the resources that we have created to be able to assist either a client, you as a service provider, and then these are all easily accessible. So we have this all online. We'll go over some of them right now. Bear with me. Can you see my screen?
So I think we can see the housing search log, and I just want to flag for time really quickly, Raquel.
Go ahead.
That we only have about 10 minutes left. So
okay,
if we can I did just send out the link to the resources, the Google Drive folder that you have open, as well
perfect.
as the Trello board. So certainly I think it's okay for people to follow up on these resources after the training.
Perfect. So basically these are just some of the resources that we have so far. Okay. So So one of the key resources that I definitely want to emphasize is the training as well. You do have the rental programs training also, a copy of that on the Trello board.
And that's the MOHCD.
And that's the
training.
mayor's office training. And this is from the January 28th training. Okay. Actually, and then now, of course, for those who want to get further training, the CTCAC or the State Treasury actually provides virtual basic compliance workshops. So this is the link, and this link will also be provided to you. The next class will be April 11th. So you could sign up for that. And then, of course, some of the information that Juan covered is actually all on this one. So it's all on these resources, the CTCAC online compliance manual, the compliance forms that he showed, as well as some of the questions you have with regards to the changes to income verifications and documentation during COVID-19. So anyway, we want to use this remaining time for our questions. So Chrissy, could we go over some of the questions?
So I actually, if you can allow me to share I was going to share my screen with a list of all the questions, but I actually think that's going to be a little bit too overwhelming. So let's maybe go through a couple of them at a time. And Juan, I think these are mostly questions for you. So I'm going to start with some of the questions regarding documentation and income. And maybe you can just help us answer these. So the first question is, what if someone has a social security number but is unable to provide the card? Can their application be approved conditionally if they provide evidence that they're in the process of ordering a replacement?
Yes, at least at the NDC, they need to fill out like an affidavit that they lose their social security card. And then I think it's a month that we gave them to provide the card.
Great. And a next question, and also for folks who are asking these questions, I think these are primarily from Kristen, Julian, and Sherry. Feel free to chime in. But next question I have here is regarding income for caring for foster children. Would that be counted as household income?
That's a great question. I don't recall that right now. That should be on the HUD manual 4350.3 on that chapter 5. That's something that I need to look at, because that's a specific question that I know that has been addressed in the past, but I don't want to give a response that is not totally correct. So.
And then the next one is, I've seen tax credit buildings require up to 6 months of bank statements, but also as few as 2. I've also seen buildings that require tax returns and others that don't. Is there a standardization of this, or is this up to the individual properties?
That's correct. Every property manager has their own rules. So yes. Some people require tax returns, some others no. We don't require for when it is someone is employed. So we only require if it is a self-employed, because we need the net income from the tax return. But that's every company have their own policies regarding that. I can say that that's the same through all the companies.
And then just a question once. So if somebody does have a question regarding documentation that's being requested, at what point would it be appropriate for them to just ask the property manager themselves, or should they be referring back to that compliance manual? What would you recommend in that situation if a housing counselor is just trying to determine, is this reasonable thing to request or not?
I'll say contact the property management, because again, there are certain things that are not specifically stated on the compliance manual. There are certain things that, for example, asking for two bank statements that you are not going to find out on the compliance manual, but that's a company policy.
Okay.
So you should ask the property manager.
And that leads a little bit into another question that came up, which is just that I think a lot of our service providers understand that buildings are allowed to have stricter policies than are listed in the manual, but to what degree, at what point would there be restrictions on certain policies?
Honestly, the thing is that every property management, again, we talk about the structure. There is an investor, there are investors. So the investors sometimes impose some stricter requirements to the property managers, and that is why it can be different from property manager to property manager. But there is, if the property manager is following all TCAC requirements, but have some additional requirements, I think that TCAC is simply allows that. But I don't know to which extent. It should be something like if, for example, if the property manager is requesting something that is like not against a rule, or is against fair housing or something like that, that could be. But if not, every property manager can establish their own rules.
And I would say that I've heard, at least I think from the Mayor's Office of Housing in the past, that if you're a housing counselor and you feel like or your client is concerned about rules being broken, whether fair housing, discrimination, that they can certainly, contact obviously the property manager, the compliance, or the Mayor's Office of Housing directly. I think that is the one time where the Mayor's Office of Housing can certainly kind of get involved and address your concerns to some degree.
Yeah.
Okay, so a couple more questions. One here regarding appeals. So, and Kristen, I think this is a question from you regarding appeals. After, if the appeal is received, let's see, this is the appeal after 10 days. Oh, if no update regarding the appeal was received after 10 days, I guess by the applicant, right? The applicant submit an appeal. And if 10 days have passed and they haven't heard, at what point would it be appropriate maybe for a service provider to reach out to the compliance team directly?
As soon as the 10 days end.
Okay. Okay.
10 days end.
That's clear. And then let's see, next question. With the 75% rule, if someone has just been hired, should the building wait a couple of weeks for the first pay stub, or can they deny an application for not being able to provide that pay stub immediately?
Again, that will depend on the property manager.
Okay.
The rules state some property manager, I need to be honest, some property managers are using that rule. Some others are simply denying applicants because they don't have the 3 months of pay stubs. So basically, the first thing is that the property manager should be following the rule as a standard. If the property manager is following the rule as a standard, then having at least just one full pay stub will allow the applicant to move in, or the property manager to qualify that applicant. But it all depends on the property manager and if they are really following that 70% rule. Again, some property managers are simply denying applicants that they don't have the full 3 months of pay stubs.
And then one last question. I'm so sorry, we're just at 12, so I understand if people have to go. Do you have time for one more question, Juan?
Yes. Yes.
Okay, and this is regarding COVID, kind of since COVID-19 and loss of income. So there's kind of two parts to this question. One is just how is non-payment of rent being addressed during COVID-19 for TCAC renters?
Well, at least at TNDC, you all know that there is a rent moratorium in place. So what we are doing is that we are just, since this all started, we have been just sending letters letting the tenants know the amount that they owe. So every month we are sending, hey, this is the amount, this is the amount, this is the amount. There is a new program, an HCD program. It's a rent relief program that allows all property managers to get some, I think it's 80% of the rent owed by the tenants. So we, at least we are TNDC, we are applying for that program. So if we can receive those payments, then we will just write off all that debt of those tenants during this time.
Wonderful.
But,
yeah. And is that property by property?
That wasn't actually my question, but that is important for people to know. Thank you. The question was actually about considering rental histories to get into a building, right? Normally you would look at 2 years of rental history to see, and one of the issues you would look at is non-payment of rent. I believe part of SB 91 also says you're not supposed to discriminate against potential renters in new buildings who have COVID-related debt for rent. And so I guess my question is, how are TCAC buildings considering new applicants who maybe haven't been able to pay rent, during the pandemic, if maybe they have more expensive rent than what they can afford right now? And that's one of the reasons they're applying for housing.
Sure. To qualify for all of this program, every tenant needs to provide evidence that they have a reduction in hours, that they lost their jobs because of COVID. So with that information, we can accept a tenant because basically it was based on COVID. But that's different from if the tenant right now have the income enough to meet the minimum income requirement. Those are two different things. But talking about the landlord reference or the 2 years or the rent payments, if it was they were not able to pay based on COVID and they have the evidence, we can consider that as a mitigating circumstance, and then we can allow them to move in out of property.
And should they present that just on appeal, or is there a way to present that evidence up front? What's the
when we do the interview to the applicant, I'll say that that's the perfect timing for them to explain that and to provide any information that they have about them.
Okay. All right. Thanks.
Okay.
Thank you, Julian. Sorry to miss the question, but yeah, that is definitely, that actually I think answers a couple other questions that had come up regarding people who are currently applying and what that means, the impact from COVID-19 if they've lost income temporarily. Are there any other just burning questions? I think that actually covers most of the areas that had come up. Okay, I think we're good. Thank you so much, Juan, for answering these questions. I see there is one additional question here in the chat regarding how counselors could contact the compliance team at TNDC. Is there an email address that's generally available? Should they contact the property manager for that information? What would be the appropriate approach for that?
At TNDC, you can contact the compliance team just using that compliance team at tndc.org. So that's the direct email for the compliance team, and you can contact us using that email.
Wonderful.
Thank you, Juan. Sorry, I have Kristen. This is the other Kristen. One of my questions in the sidebar was missed. In regards to if a tenant increases their income before move-in, if the household income did not exceed the max with the addition of the new income, does that mean an eviction will still be pursued at recertification?
If we found at first year certification that the household was working and we made the calculation again and it's not over the income, we don't start the eviction process. Okay. It's not, but it's not, if they start a job, they should tell us. Mm-hmm. This is a lease violation. We can start an eviction process because they didn't include all the income. Mm-hmm. But if they are qualified, we can consider not starting an eviction process, but we can do that
Okay.
based on the list.
Okay.
And I want to go back to the question about foster children. So Manual 4350.3 established that payment received by the family for the foster care of foster children or foster adults are not counted. So those payments are not counted. Okay.
Great. Thank you so much, Juan. We so greatly appreciate your time and putting this training together for us. And of course, please reach out if there are things we can provide in return as well to your team. Ultimately, everyone here, you know, our goal for this training is to help you support your clients as best as you can so that your expectations of these policies are clear and so that you can pass those expectations along to your clients and really help them, you know, have realistic conversations about what they're eligible for, what they're not, and what to do if it's determined, you know, that they are not qualified, and how to, of course, continue along with the goal of finding housing that's affordable and sustaining that housing. So thank you all so much for being here today. Thank you so much, Juan. We greatly appreciate, again, your time and efforts. We